Hi, this is Lara at Elliott Wave Gold with your daily analysis for Tuesday, 25th of November. I'm recording the video today 10 minutes past 6 p.m. Eastern Standard Time on Tuesday the 25th Eastern Time. I was expecting upwards movement. I was looking for a strong increase in upward momentum. That's not what we've got. We've got sideways movement with another small green candlestick. I'm swapping the main and alternate hourly wave counts over. As I said yesterday, if we didn't see that strong increase in momentum, that wave count would reduce in probability. At this stage, my short-term target is 1218. I'm expecting slowing, choppy, overlapping upward movement to continue for another 2, maybe 3 or 4 days to complete a first wave leading contracting diagonal. If that's what happens, then when that's done, the next movement should be a very, very deep second wave correction. Alternately, it is still possible that in the next 24 hours we could start to see a rocketing up of strong upward movement. If momentum increases very strongly to the upside, then my short-term target is now 1249. Let's have a look at the wave count at the daily chart level. My wave count sees primary wave 4 over here as a huge regular contracting triangle lasting 54 weeks. There is perfect alternation and almost perfect proportion with primary 2, which was a rare running flat and lasted 53 weeks, and they're both pretty close to a Fibonacci 55 weeks in duration. Primary 3 has a 1.618 price ratio to primary 1, so at 956.97, if primary 5 reaches equality in length with primary 1, that would be the most typical Elliott relationship for this downward big impulse, which I'm labelling cycle wave A, of a huge correction. However, if this target is wrong, it's going to be too low because, as I keep saying, when triangles take their time and move price close to the apex before price breaks out of the triangle trend lines, then the movement that follows the triangle is often more weak and brief than you would otherwise expect it to be. And here's a perfect example of what I'm trying to explain. Here we have a fourth wave triangle, and it was followed by a remarkably short, quick fifth wave. We might be about to see that happen here at primary degree. Now, it doesn't always work like that. This target may still be met. For now, I can only calculate it at primary degree, so that's what I'll do. But when intermediate waves 1 through to 4 within primary 5 are complete, I will recalculate the target, and if it changes at that stage, it will probably move upwards. For now, I'm not labelling primary wave 5 over here because I'm struggling to see how from this high, the end of the triangle, to this price low down here, how that could subdivide as an adequate 5-wave impulse. Now, you certainly could label it as a 5. You'd label it 1, 2 would be a zigzag lasting 5 days, 3, that would fit as an impulse, 4 would be a double zigzag lasting 11 days, and about the same depth as 2, so there would be inadequate alternation in depth and structure, and 5 would have a cursory count of 7. We count this as 1, 2, 3, 4, 5, 6, 7. That's corrective, not impulsive. I think this downward movement actually fits better as a zigzag than an impulse. So if you tried to label primary wave 5 over down here, those are the problems I see with that idea, and that's why I'm not going to go with that wave count. If you see a 5-wave impulse complete down here, we have a leading contracting diagonal for 1, a deep zigzag lasting a Fibonacci 5 days for 2, 3 has a 1.618 price ratio to 1, 4 is a running contracting triangle lasting a Fibonacci 8 days. It is 1.618 the duration of minor wave 2, so there is perfect alternation and good proportion between 2 and 4. Triangles are usually more time-consuming structures than zigzags. And now we have a fifth wave which has a 0.618 price ratio to the first wave. With all of those great relationships and ratios within this downward movement, I am confident that this is where a 5-wave impulse ends. I do not think intermediate wave 2 was over here as a zigzag for 2 reasons. It would be rather brief and shallow, and this downward movement does not subdivide at all well as a 5-wave impulse. It has a perfect fit as a 3-wave zigzag. So I think intermediate wave 2 is incomplete, and it will be unfolding as a big expanded flat correction, which is a really common type of correction. The only problem with this idea is the depth of minor wave B. The most common length for a B wave within a flat is up to 138% the length of the A wave. In this instance, minor wave B is 172% the length of minor wave A. So it's quite a bit longer than the maximum common length, but it is within the allowable limit of twice the length of minor wave A. I'm expecting upward movement for minor wave C to be extremely likely to take price at least slightly above the end of minor wave A to avoid a truncation and a very rare running flat. It's most likely to see intermediate wave 2 end about the 0.618 Fibonacci ratio of intermediate wave 1, which is just below 1281. Intermediate wave 2 may not move beyond the start of intermediate wave 1 above 1345.22. I'm reasonably confident that this price point will not be passed because, as I said, if we have to see a movement above this price point, that means downward movement was over here, which means you have to label from this high to this low a completed 5-wave structure for primary wave 5, and that's too difficult to do. Within minor wave C, which must subdivide as a 5-wave structure, it's a little bit confusing with all this choppy, overlapping movement. I have 2 wave counts for you today still. The main wave count now looks at minute wave 1 completing as a leading contracting diagonal. This is exactly what it will look like when it's complete, except it'll be sloping up, not down. This upward movement does look like we're seeing a rising wedge come to complete. When first waves subdivide as leading diagonals, they are normally followed by very deep second wave corrections. Perfect example here, a leading diagonal, a deep second wave correction. So if this unfolds as we expect as a leading diagonal, then I'll expect minute wave 2 to be very deep, and it can't move beyond the start of 1 below 1131.09. When I know where minute wave 1 has ended, so I know its length, and I know where minute wave 2 has ended, then I'll be able to calculate a target up for the following third wave for you. We're not there yet. Let's have a look at the first hourly wave count, and I'm looking at them today on 2 hourly charts. This low down here, this is the leading diagonal idea. Within leading diagonals, first, third and fifth waves are most commonly zigzags, but they may also be impulses. So I'm seeing this upward movement as a 5, 3, complete 5 for the first zigzag. Here we have a zigzag downward complete for minute wave 2, and the only problem with this wave count is the depth of the second wave. It's about 0.4 the length of the first wave, and second and fourth waves within diagonals are more commonly quite deep, between 0.66 to 0.81 the length of the first or third wave. This one's quite a bit more shallow than that, reducing the probability of this main hourly wave count, which means we must still seriously consider the alternate. It is viable, it is possible. This wave count expects upward movement. The short-term target is the same at 1218. Subminuet wave C within the zigzag of minuet 3 will reach 1.618, the length of subminuet A. Subminuet C must subdivide as a 5-wave structure, so it can be either a diagonal or an impulse. Ending diagonals are not really that rare. They're a bit more common than leading diagonals. So this wave count for the structure for the C wave is perfectly acceptable. Within an ending diagonal, all of the subwaves must be zigzags. So we have a zigzag for 1, a zigzag for 2, we need a zigzag up for 3, and then one down for 4, and another one up for 5. So I'm expecting a continuation of this really choppy, overlapping, slow movement, generally trending upwards to complete a rising wedge for minute wave 1. When minuet 3 within the diagonal is complete, we'll expect downward movement for a 4th wave correction to overlap back into wave 1 price territory. It can't move beyond the end of 2 below 1175.18, and it shouldn't be longer than 2. It should be shorter because I think the diagonal looks like it's going to be contracting. Alternatively, it's the same down to the slow down here, and now this is an adjustment from yesterday's main wave count. What if we have 1, 2, 3, 4, 5? What if minute wave 1 was over up here? I'd previously seen it as over down here. When we see it over up here and we draw a base channel around minute wave 1 and now here is minute wave 2, upward movement is mostly finding support around about the lower edge of that base channel. We don't have a proper breach of it, and so this actually now has a better fit, and thanks to one of our members for pointing this idea out to me. Only a couple of problems with it. We have a slight truncation. Subminuet C has failed by less than $1 to move beyond the end of A. It's slightly truncated, and that's okay. It slightly reduces the probability of this wave count. But the problem still remains that if we're in a third wave of a third wave of a third wave of a third wave, we really should be seeing an increase in upward momentum. We shouldn't be seeing a slowing and levelling off of momentum, which is what's happening. This wave count needs to redeem itself within the next 24 hours. If we start to see momentum strongly increase, this could be a really good explanation. The target is 1249, where minute wave 3 will reach equality in length with minute wave 1. Within this third wave, this small second wave correction may not move beyond the start of the first wave, below 1186.90. That's all for me today with your gold analysis, and I hope all our members are having an awesome day.